Next up, we have the delta flip signal. Now, these are ones to certainly watch for, and you'll often find that these will occur in conjunction with some other things, as we'll look at in a second here. But let's focus on what it is at first. It's relatively straightforward conceptually. We're going from a min to a max, or very close to it. So first bar closes on its min or its max delta, and then we get a complete flip where it in turn closes next bar on its min or its max. So we see here the max delta is 398 in this bar. The total is 392. So we're not at the exact high delta, but we're within a few points of it. And then here the delta is 180, but the min, the max of the min, if you will, is negative 183. So it's this extreme flip-flop, if you will, that you see in the delta that triggers the signal. So let's look at it on the chart, and this is we've been using this section here a bit. This is back to Friday, where so remember we had the big push up here. We put in a new high for the day. We're just looking at this with delta divergence. So you'll note here that interestingly, so this is the high of the day at that time, and this is the last swing high. There's effort here to try and get up above it, and this is the big push, right? So you just in terms of the aggression here, which you can see reflected in the delta. So here they've tried repeatedly to get some legs here, and this is the last big push here, and you can see we close on the max. Now this one you're closing on the max. The delta is 607. We close at 607. So this is as aggressive as can be in that 1 minute bar. Push. What do we get? I get one tick break here, and then I get the reversal. So you'll note here additionally, right, we'd get additional delta divergence here. This would be, it's actually an equal high. We get delta divergence. Now you've got a few other bar markers here, but let's focus on the flip. So 607 to 426. Again, the max of the min, I don't know for a better way to say it, the max of the min is minus 461, but we close at 426. So we're not right, we didn't go max here to max, but darn close, right? So that creates the flip. Now you've got a couple of things working for you. So one, it's reasonable to anticipate this was a liquidity grab, right? Looking to trap traders here playing the breakout. Then we get the immediate flip. So again, more insight that a FootPrint chart gives you over a candlestick. So I get that flip here, and then I see well, of course you can see the continuous POCs that are all up here. So there's a real effort to try and get to new highs here. But even with all of this aggression, down they come here. One more try before it starts to drop off a little bit further. So you can start to put some concepts together here. So we have delta divergence. We have a delta flip. Likely you'd have trapped traders here as the market starts to move away from them. So you got a number of things suggesting that this would be an area where, if not taking action on the short side, you'd want to be tightening up any thoughts about staying long or getting long. All right, delta flip.